Hi everybody, it's Kevin here from NorthStarBuyCharts.com, of course, and I've just posted this chart on my Twitter feed, and I wanted to explain a little bit more about it. So podcast is probably a good way of doing that. So here we go. So what are we looking at? We're looking at the price of gold since it's moved up from well, during the during the early 2000s and up to the bull market peak in 2011, where we were up to around about $2,000 or so. Of course, as we all know, since then, we've had a very long, painful, drawn-out sort of basing process, which carved out the left-hand side of this arc very nicely. And you'll know that I'm a bit of a fan of arcs, and I see them all over the place, and they're really useful to help us sort of forecast into the future where the support is going to be for price as it begins a new uptrend. Excuse me. So what's happened is that price has done the sort of three things that I always look for when you want to get into a sort of developing bull market, and it broke above the 12-month moving average, which is really important. It also broke above this long-term downtrend line, a couple of them in fact. The first one is around about $1,300, and then final confirmation is around about $1,400. And those that follow me might remember I was tweeting about it at the time. And of course, following the $1,400, the ARC guided the price up. We came back down and tested it again in March of last year when everybody was panicking. And then it rapidly rose well above $2,000 during the sort of July-August period last year. Since then, we've been going sort of down sideways and basically nowhere. Effectively really consolidating those gains, and such a big move from below $1,200 to over $2,000. You know, it's, I don't know, what's that, probably 70%, 80% move for the price of gold. And it takes time for that move to be digested. We are in an ongoing bull market, but we've got to bear in mind that the 8-year cycle low comes in well, 2000, 2008, 2016. You can see the 2008 low back here. That's how the 8-year cycle low affected gold price in 2008. In 2016, price descended all the way down to the low point in late 2015, early 2016. So that was 8 years later. And then another 8 years after 2016, of course, we've got 2024, or late 2023, early 2024. That's an election year in the US, November 2024. So it's going to be interesting to see how what's going on in politics in the US, how that affects things. Also in the more immediate future, how inflation, interest rates and real rates affect what's going on here. I've been posting about that quite extensively recently, and I think all we need to really be aware of, I think, on this gold chart is the breakout line and the breakdown line. The breakout line at the moment is somewhere perhaps around about $1,900 to just a little bit above $1,900. A move above there would break us out of this potential developing bullish pennant and take us back, I think, towards or to the previous all-time highs of $2,000 and beyond. Do I think that's going to happen? Well, it doesn't really matter what I think, does it? It's more what the chart's telling us. And the chart at the moment is holding support, horizontal support in the 1770 to 1830 range. If we come down below this 1870, I can just extend this sideways a little bit. If we come down below this 1770 level, then it seems fairly clear to me that we're going to be testing the lower part of this pennant around about 1670. But that's nothing to worry about in the longer term. Of course, if you're a short-term investor and you're trading, you would, you know, base your decisions on these sort of levels, you know, around about, as I say, 1770, 1760, that sort of level. Maybe perhaps down as low as 1750, but a move below that, as I say, it takes us down to this lower support line around about 1650 or thereabouts, depending on the timing. And we could just bounce around in this sort of bullish pennant until we get down here somewhere, and the 8-year cycle low, put the 8-year cycle low in, and boof, off we go up to the upside, and everything takes off. Commodities really start their bull market. Really what I'm expecting is for the real bull market in commodities and precious metals to get going after the 8-year cycle low. But Do we get a breakout and a rally later on or during the next sort of couple of months into the sort of August, maybe September period? Or do we continue to sort of consolidate and drift slowly downwards? Well, that's really for the chart to tell us. And as I say, quite important, we've got a quarterly close coming up on Wednesday. January, February, March is a quarter, and April, May, June is a quarter. So the close at the end of June on Wednesday is going to be quite important, telling us quite a few things. If we've broken down a little bit below this line, then that's and we close below that line on Wednesday, that's significant and giving us some bearish signals. If we were to turn around and close above this resistance line, then that will give us some very big clues as well. Looking at the stochastic RSI, it's in the low sort of reading zone. Doesn't necessarily mean that we're going to sort of turn around and come back up into the high zone. As you can see back here in 2011-12, it bounced around in the low area for quite a period of time. So if we are descending down into this 8-year cycle low, then we may well just bounce around in this low reading area. So watch the 200-day moving average as well. That's significant. Not 200-day, I beg your pardon. The 12-month moving average is around about 1840. So a close above that on Wednesday would also be very bullish, even if we don't break above the upper dotted resistance line on here. So there's a lot of things to look at. Overall, it's all fitting in with my big picture roadmap, but in the shorter term, we've got some clues to deduce and some signals to uncover over the next few days, and no doubt the next couple of weeks to sort of give us some real good clues as to where we're going. But that's how I'm seeing it at the moment. I hope that was useful and helpful to you. Let me know in the comments if you like these little podcasts. Myself and Patrick will carry on doing them, particularly for the big picture charts. I think they're quite useful to talk over the big picture and explain how we see the longer term. So yeah, thanks for watching and thanks for listening.